So this is part of that business planning regarding mortgages, because especially when you're in business, you need as much credit and capital you can get your hands on when needed, and you don't never know when things will happen, and when things happen, you might not be able to get the capital and credit that you need at that time.
Yeah, and it's a story for another day, but it is to along the same lines as a traditional mortgages. If you're of age and if you qualify, there's a lot of power in the new reverse mortgages and how they're structured and how they're a benefit to we'll say pre-retirees. I think some limits now are like age 55. You can actually have some sort of reverse mortgage, but we have obligations and things that keep us from allowing traditional mortgages to play a vital role in whether it be retirement planning or emergency funds, and that's something good that's come along with the reverse mortgage in the last several years. They're not structured the way they once were. They're a huge benefit now, and I'm an advocate for those that understand it and work with someone who is well qualified in that space. And we obviously have people we endorse for that, so it's also a consideration.
Oh, absolutely, especially in those retirement years, be able to get your hands on tax exempt capital, because you don't pay, in the vast majority of cases, you don't pay income taxes on loans. I can only think of one exception to that, and that's a very specific type of life insurance loan, but it's usually not the standard. It's usually the exception on that one. So we're looking at the worst case scenario, but let's look at the best case scenario. Everything works out fine, but at the same time, we could have done better with our money. From the same advice from the other guy. Now, we talked about his 12% mutual fund a couple of weeks ago, and we know it's not exactly 12% a year, but it was a good fund.
It was pretty close.
It was pretty close. Not too bad. But we have one of our mentors, because we're on the same financial group, and he has a newsletter. This is out about 18 months ago. And so the rates will be obviously different. It's not the most timely right now. But he says, if you had a 6% mortgage rate, but you have a 12% investment return rate, a $100,000 mortgage at 6% for 30 years, not including taxes and insurance, would have a payment of about $596 monthly. Let's call it $600 a month.